Did you know that a single crypto company now owns more gold than the entire nation of Australia? Not a central bank, not a sovereign wealth fund. A crypto company based in El Salvador that prints digital dollars. This is not a conspiracy theory. This is a fact confirmed by Wall Street investment bank Jefferies. Tether, the company behind USDT, the largest stablecoin in the world, has quietly accumulated 148 metric tons of physical gold. That's $23 billion worth. Australia's Reserve Bank, 80 tons. The United Arab Emirates, 74 tons. South Korea, 104 tons. Qatar, 116 tons. Tether owns more gold than all 4 of those nations combined. A private company based in the British Virgin Islands, a company that prints digital dollars backed by US Treasury bonds, has accumulated more real money than the Reserve Bank of Australia. Let that sink in for a moment. While you are being told to save in dollars, to trust the Federal Reserve, to believe in the stability of the US financial system, the company that prints the digital dollar is dumping it for gold. Not slowly, not cautiously, aggressively. They bought 70 tons in 2025 alone. That's more than nearly every central bank on Earth except Poland. They're buying 1 to 2 tons per week. And they're storing it in a former nuclear bunker in Switzerland with what their CEO calls James Bond level security. This is the ultimate vote of no confidence in the US dollar. And it's happening in plain sight while the mainstream media is completely silent. By the end of this video, I will show you exactly why Tether is doing this. I will show you how they're using the dollar zone system to bet against the dollar. I will show you why this is the biggest red flag in the history of modern finance. And I will show you why silver is next. But first, I need to know where you stand. Do you trust the US dollar, or do you trust physical assets? Pause this video right now. Go to the comments and type paper if you trust fiat currency and the Federal Reserve. Or type physical if you trust gold, silver, and real assets. I want to see if this community is awake. I want to see who understands what's happening and who's still asleep. Comment now. Paper or physical? Cast your vote. I'll wait. All right, let's talk about what's really happening. Let's expose the new whale. Tether is not a household name. Most people have never heard of it. But if you've ever used cryptocurrency, you've used Tether. USDT is a stablecoin, a digital token pegged 1 to 1 with the US dollar. It's used on every major cryptocurrency exchange as the trading pair for Bitcoin, Ethereum, and thousands of other coins. The market cap of USDT is currently $184.5 billion. That makes Tether one of the largest holders of US government debt outside of China and Japan. They hold $141 billion in US Treasury exposure, $122 billion in direct holdings plus overnight reverse repos. Here's how the business model works. They issue USDT tokens. Every token is supposed to be backed by $1 of reserves. They take those reserves and invest them in US Treasury bonds. And they collect the interest. In 2025, Tether earned approximately $10 to $15 billion in profit. That's profit, not revenue. Pure interest income from holding US government debt. Now, what would you expect them to do with that profit? Reinvest it in more treasuries? Keep it in dollars? No, they're converting it into physical gold. And they're doing it at a scale that is shaking global markets. As of January 31st, 2026, Jefferies estimates Tether's physical gold reserves at 148 tons valued at $23 billion. Let me break down how they got there. In Q4 2025 alone, they bought 26 tons. In January 2026, they added another 6 tons. Total 2025 purchases, over 70 tons. That's more than nearly every individual central bank except Poland. That's 2% of total global gold demand in a single quarter. That's 12% of all central bank gold purchases worldwide in Q4 2025. A private crypto company moved 12% of global central bank demand in one quarter. Tether CEO Paulo Ardoino confirmed in a Reuters interview on January 28th that Tether holds around 140 tons, his conservative figure, and they're purchasing at a rate of 1 to 2 tons per week. Where is it stored? In a former nuclear bunker in Switzerland. Ardoino described the security as James Bond level. Why Switzerland? Because Switzerland is neutral. Because Swiss vaults are outside the reach of US sanctions. Because if you're holding $23 billion in gold, and you don't trust the dollar, you don't store it in New York. Now let's compare Tether's 148 tons to sovereign nations. Australia, 79.87 tons. Tether has almost twice as much gold as the entire Reserve Bank of Australia. United Arab Emirates, 74.26 tons. Tether has double what the UAE holds. South Korea, 104.45 tons. Tether surpassed them months ago. Qatar, 115.97 tons. Tether passed Qatar in January. This places Tether among the top 30 gold holders globally. And they're not done. Jefferies analysts estimate Tether aims to acquire another 100 tons in 2026. At the current purchase rate of 1 to 2 tons per week, they will own 200 tons by year-end. That would put them ahead of Norway, ahead of the Philippines, ahead of Iraq. A crypto company printing digital dollars will have more gold than Norway. And here's the most important part. Jefferies has cautioned that these figures represent a minimum estimate because Tether is a private company and not required to disclose complete balance sheet details. That means 148 tons is the floor. The real number could be higher. Now, why are they doing this? Let me read you what Paolo Ardoino, Tether's CEO, said in his own words. Quote, "We will soon be one of the largest gold central banks in the world. Not a hedge fund, not a private investor, a central bank." Quote, "The global situation is quite grim at the moment. Gold prices are reaching record highs daily. Why? Because there is widespread fear. He's not buying gold because he thinks it's a good investment. He's buying gold because he thinks the system is breaking." And here's the quote that should terrify you. Quote, "Only Tether can halt de-dollarization. We are indeed the last bastion for US dollar hegemony." Read between the lines. The CEO of the company that prints $184 billion in digital dollars just admitted that de-dollarization is happening. And his solution? Buy gold. They're earning billions in interest from US treasuries. And they're using that profit to bet against the dollar. That's not loyalty to the dollar. That's an exit strategy. Now let me show you exactly how this machine works. Tether's gold strategy is brilliant, ruthless, and it's already working. They take your dollars. They issue you USDT. They invest those dollars in US treasuries. They collect $10 to $15 billion per year in interest. And then they convert that interest into physical assets that the government can't print. Gold, Bitcoin, gold mining royalties. And they're building the infrastructure to do it at scale. Tether just hired 2 senior gold traders from HSBC. They're building what Ardoino calls the best gold trading platform in the world to compete with JP Morgan and HSBC. They've spent over $300 million buying stakes in precious metal producers, including a 32% stake in Canadian gold royalty firm Elemental Altus Royalties. And they've committed 15% of quarterly realized operating profits to Bitcoin. As of December 31st, 2025, Tether holds approximately 96,000 BTC worth $8.4 billion. Do you see the pattern? They're diversifying out of dollars into hard assets. Gold, Bitcoin, equity, and mining companies. But here's what nobody's talking about. Here's the trade you haven't missed yet. Silver. Tether has already bought the gold. You didn't get that trade at $1,800 per ounce. You missed it. Gold is now over $5,000. The easy money has been made. But they haven't bought the silver. Yet. And when they do, when Tether decides to allocate even 1% of their portfolio into physical silver, the market breaks. Let me show you the math. Tether's total portfolio, approximately $193 billion in reserve assets. 1% of that, $1.93 billion. Current silver price, approximately $70 to $100 per ounce, depending on whether you're buying paper or physical. Let's use $80 as a conservative estimate. $1.93 billion divided by $80 per ounce equals 24 million ounces. Now, let's look at the COMEX registered inventory. As of early February 2026, COMEX has 103.5 million ounces of registered silver available for delivery. If Tether buys 24 million ounces, just 1% of their portfolio, they're absorbing 23% of the entire COMEX deliverable supply. But wait, it gets worse, or better, depending on your position. The silver market is in its 5th consecutive year of structural deficit. Cumulative deficit from 2021 to 2025. 820 million ounces drawn from above-ground inventories. Expected 2026 deficit, another 200 million ounces. That deficit has to be filled from somewhere, and it's being filled by draining exchange inventories. During the first week of January 2026, COMEX warehouses experienced a 33.45 million ounce withdrawal in 1 week. That's 26% of registered inventory gone. Shanghai Gold Exchange silver withdrawals hit record levels at year-end 2025, with China implementing VAT rule changes that triggered massive physical deliveries. The vaults are already empty. The market is already broken. And Tether hasn't even shown up yet. Remember the 8 to 10 week delivery delays we exposed in the last video? That is happening without Tether. Imagine what happens to those delays when a $23 billion whale enters the room. Now imagine what happens when they do. Paolo Ardoino has already said publicly that Tether aims to allocate 10% to 15% of its investment portfolio to physical gold. They're at 12.5% now. They hit their target. What's the next logical step? Diversify into the other monetary metal, the one that's historically tracked gold but is currently trading at a 70-to-1 ratio instead of the historical 30-to-1, silver. And here's why it makes perfect sense for Tether. Gold is expensive, $5,000 plus per ounce. To move the market, you need billions. Tether has billions, but even at their scale, buying 100 tons of gold is a multi-month operation. Silver is cheap, $70 to $100 per ounce. The entire COMEX registered inventory is worth $8 billion at today's prices. Tether could buy the whole thing with 1 month of profit. And unlike gold, silver has industrial demand that creates a price floor. Solar panels, electric vehicles, electronics, 5G infrastructure. Silver demand from industry is irreplaceable and growing. If Tether wants to position for a world where geopolitical rivals launch a gold-backed currency, which Ardoino himself predicted, then owning silver as a hedge makes strategic sense. So let me ask you a question. Do you think they will buy silver next? It's the logical next step. They've conquered gold. They've accumulated Bitcoin. The next frontier is the white metal. Type silver next in the comments if you think the whales are coming for silver. I want to see if this community can read the signals. Because if I'm right, if Tether announces even a small allocation to physical silver, the scramble begins. And by then, it's too late to position. Let's zoom out. Let's talk about what this really means. Tether is not acting alone. They're part of a global trend that the mainstream media refuses to cover. De-dollarization. Central banks around the world have been buying gold at record levels for 3 straight years. 2022, 2023, 2024, 2025. Every year, central bank gold purchases hit all-time highs. China, Russia, India, Turkey, Poland, Singapore. Every major economy outside the US is accumulating physical gold. Why? Because they watched what happened to Russia in 2022. The West froze $300 billion of Russian central bank reserves. Overnight, assets that Russia thought were safe, dollars, euros, treasury bonds, became worthless because the US flipped a switch. That was the wake-up call. If the US can freeze Russia's reserves, they can freeze anyone's reserves. So what do? You move out of dollars and into assets the US can't touch. Gold. First it was the central banks. Now it's the crypto giants. Tether is the bridge between the old financial system and the new one. They issue a digital dollar, but they're backing it with gold. They're creating a hybrid that doesn't rely on trust in the US government. Paolo Ardoino even said it explicitly. Geopolitical rivals will introduce a dollar alternative peg to gold. He's not speculating. He's preparing. And Tether's gold token, XAUT, is the vehicle they're building for that world. XAUT is already the largest gold-backed stablecoin in the world, with over $4 billion in value. It accounts for more than half the entire gold-backed stablecoin market. Do you see what's happening? Tether is building a parallel monetary system, one where the dollar is backed by gold instead of government promises. And when the smart money leaves the room, when the institutions that control hundreds of billions start converting dollars into gold, who's left holding the bag? You are. Unless you act now. Because here's the brutal truth. When Tether converts $23 billion in profits into gold, they're not buying it from the Federal Reserve. They're buying it from the market, from dealers, from vaults. from people who are selling. Every ounce they buy is an ounce that gets locked away in a Swiss nuclear bunker. Forever. And the same thing is about to happen with silver. When Tether moves into silver, and they will, the available supply shrinks. The premiums widen. The delivery delays extend. And by the time the mainstream catches on, the metal is gone. This is not a prediction. This is pattern recognition. It happened with gold. Central banks bought quietly for years while the media said gold was a barbarous relic. Then gold went from $1,200 to $5,600 in 5 years. It's happening with Bitcoin. Tether has been accumulating since 2023, 96,000 BTC. While everyone was arguing about whether crypto was a scam, the smart money was buying. And it's about to happen with silver. The question is, are you going to recognize it this time? Or are you going to watch from the sidelines again? Let me summarize what we just covered. Tether, a private crypto company, has accumulated 148 tons of physical gold worth $23 billion. That's more than Australia, the UAE, South Korea, and Qatar. They're earning $10 to $15 billion per year in profit from U.S. Treasury interest. And they're converting that profit into hard assets, gold, Bitcoin, mining royalties, that can't be printed or frozen. Their CEO has publicly stated that geopolitical rivals will introduce a dollar alternative peg to gold, and that Tether is positioning to be one of the largest gold central banks in the world. Wall Street analysts at Jefferies confirm that Tether moved 2% of total global gold demand and 12% of central bank purchases in Q4 2025 alone. They're buying 1 to 2 tons of gold per week and storing it in a Swiss nuclear bunker outside the reach of U.S. sanctions. This is the ultimate vote of no confidence in the U.S. dollar. The company that prints digital dollars is dumping those dollars for gold as fast as they can convert to profits. And they haven't even touched silver yet. The silver market is in its 5th consecutive year of deficit. COMEX registered inventory has dropped 38% in 3 months. Shanghai vaults are being drained. Dealer premiums are at 20% to 30% over spot. If Tether allocates just 1% of their portfolio to silver, $1.93 billion, that's 24 million ounces. That's 23% of COMEX deliverable supply absorbed by a single buyer. The market can't handle that. The system breaks. So here's my final question to you, and I want you to think carefully before you answer. In 2030, 4 years from now, what will be worth more? 10,000 US dollars in cash, or 100 ounces of physical silver? Leave your prediction below. Type $10,000 cash, or 100 ounces silver, because the answer to that question will determine whether you understand what's happening right now. Tether understands. That's why they're dumping dollars for gold at a rate of 1 to 2 tons per week. The central banks understand. That's why they bought record amounts of gold for 4 straight years. China understands. That's why they banned silver exports and are draining Western vaults. The question is, do you understand? Or are you going to sit in dollars and watch the purchasing power evaporate while the smart money, Tether, the central banks, the sovereign wealth funds, locks up all the physical metal? The whales are moving. The trend is clear. First it was gold. Now it's Bitcoin. Next is silver. The window is closing. Not in years. Not in months. In weeks. We're watching the death of fiat currency in real time. We're watching the transition from a dollar-based system to a commodity-backed system. And the people who recognize it early are positioning in physical assets. The people who wait for CNBC to tell them it's safe, they'll be the ones left holding depreciating paper while the metal is already gone. Subscribe to this channel if you want to track the whales. Every week, I'm going to show you where the smart money is moving. Every week, I'm going to expose the transfers of wealth that the mainstream ignores. This is John A.G. Liv. We don't trade the price. We trade the corruption. Tether just told you the dollar is dying. They're converting $23 billion in profits into gold stored in a Swiss bunker. The whales are moving. Are you? Now you know.